Nvidia's stock is on a tear. It just pierced its prior all-time highs, powered by the frenzy around artificial intelligence, bold partnerships, and bullish sentiment. But behind the fireworks, there are real risks, along with long-term strengths that could make it one of the defining companies of this era. Let's walk through what's driving the surge, what could trip it up, and what may carry it forward. What's pushing Nvidia to a new high? The biggest driver right now is the announcement of a massive $100 billion strategic commitment between Nvidia and OpenAI. Under the deal, OpenAI will invest heavily in Nvidia's hardware, particularly for building out future data centers. In effect, Nvidia is committing capital that cycles right back into demand for its own products. Some critics say this looks like vendor financing, but Wall Street sees it as locked-in growth. Analysts have also been raising their price targets. Barclays recently suggested Nvidia could climb another 35%. Other banks are pointing to the company's Rubin AI chips as likely outpacing the competition once they're fully deployed. Positive revisions like these give institutions more reason to pile in. Nvidia is also benefiting from its broader ecosystem. CoreWeave, an AI infrastructure firm backed by Nvidia, recently signed a $14 billion deal with Meta. That reinforces the idea that Nvidia's influence extends beyond chips into the wider AI economy. Nvidia isn't just a component supplier anymore. It's positioning itself as an integrator, providing chip software and the architecture that powers AI data centers. Another factor is fear of missing out. The narrative is simple. If you don't own Nvidia, you're missing the AI wave. That creates retail inflows, momentum trading, and a snowball effect as the stock makes new highs. Finally, partnerships matter. Nvidia struck a deal with Intel to co-develop AI infrastructure and next-gen client computing that diversifies its exposure and shows that Nvidia is thinking beyond its GPU base. Together, these factors explain why the stock just reached a fresh peak. Stock price vulnerabilities. Even with all that momentum, Nvidia faces real vulnerabilities. First is valuation. The stock is priced for perfection. Multiples are high, and skeptics say the OpenAI deal has echoes of past bubbles. If margins compress or growth slows, the downside could be sharp. Second, the OpenAI deal itself is controversial. Critics argue it's circular. Nvidia invests in OpenAI, which then spends on Nvidia products. If that loop breaks or regulators intervene, the benefit disappears. Third, competition is intensifying. Meta is developing its own AI chips and even acquired a chip startup to accelerate its roadmap. AMD is pushing hard into AI accelerators, and other players are racing forward. Nvidia's edge is real, but it's not untouchable. Fourth, regulation looms. Governments are increasingly focused on AI, antitrust, and export controls. Nvidia's scale and market power make it a natural target for scrutiny, and restrictions could directly impact sales. Fifth, execution risk. Upcoming platforms like Rubin and Vera need to deliver at scale. If performance disappoints or yields lag, investor confidence could wobble. Sixth, customer concentration. Much of Nvidia's demand comes from a handful of hyperscale customers. If even one of them slows spending, the ripple effect is huge. Seventh, the AI capex cycle itself is a risk. Spending on AI infrastructure is enormous right now, but it's still discretionary. A slowdown in the economy could lead to delays or cancellations of data center builds. Eighth, supply chain pressure. GPUs rely on complex manufacturing, packaging, and memory. Any bottlenecks or geopolitical disruptions could hurt supply and margins. Ninth, infrastructure expansion is capital intensive. If the massive investments in data centers don't produce strong returns, that drag lands on Nvidia's balance sheet. And 10th, sentiment volatility. Nvidia has become a sentiment stock. That works both ways. Just as enthusiasm drives it up, negative headlines could send it sharply lower. Long-term positive indicators on the other side, Nvidia has powerful strengths that make it more than just a short-term trade. First, it is the undisputed leader in AI acceleration. Its GPUs, combined with the CUDA software ecosystem, form a moat that rivals struggle to breach. It's not just hardware, it's the full stack. Second, the total addressable market is massive. AI is still in early innings. Demand is expected to surge across industries: robotics, healthcare, finance, energy, autonomous vehicles, and more. Nvidia is positioned at the center of that. Third, there's more recurring revenue potential than many realize. Software, licensing, and AI services can layer on top of hardware sales, smoothing out growth and boosting margins. Fourth, Nvidia has the financial strength to keep pressing its advantage. Cash flow is strong and the company can reinvest aggressively in R&D, infrastructure, and even buybacks if needed. Fifth, the ecosystem effects are powerful. The more companies that adopt Nvidia's stack, the harder it becomes to switch. Partners like CoreWeave extend Nvidia's reach, making it even more central to the AI economy. Sixth, Wall Street remains bullish. Analysts aren't just upgrading targets because of hype. They see Rubin and future architectures delivering performance leaps that keep Nvidia ahead of AMD and others. Seventh, partnerships expand its optionality. The Intel collaboration is just one example. Nvidia is hedging its bets and weaving itself deeper into the fabric of global computing. Eighth, the global opportunity is still untapped. Nvidia's business is heavily US-centric, but AI demand is exploding worldwide. Expanding into international markets can multiply growth. Ninth, Nvidia's innovation pipeline is formidable. Historically, it has consistently delivered breakthroughs in GPUs, interconnects, and data center design. If Rubin and Vera follow that pattern, the lead extends further. And 10th, there's always optionality in M&A. Nvidia can acquire strategically to strengthen its position or become a key player in broader consolidation across the AI industry. Let's wrap it up. Nvidia's new high isn't a fluke. It's driven by bold bets, ecosystem power, and AI momentum that feels unstoppable. But the risks are very real. Valuation stretch, competition, regulation, and the possibility of overreach could all derail the run. For investors, Nvidia represents both extreme risk and extreme opportunity. If you believe the AI revolution is real and long-lasting, Nvidia is the clearest way to ride it. Just don't expect a smooth ride.